Well, for a closer look at the Fed's decision, I'm joined by Joe Minarik. He's the Senior Vice President and Director of Research at the Committee for Economic Development. Thank you for joining us again.
Good to be here.
So let's start with your reaction to the Fed raising its interest rates and its possible impact on the economy.
There will be a slight impact, but this was very much baked into people's anticipations with respect to their investment plans, their spending plans. It's not like this is going to take anybody by surprise and that we would expect any sudden changes.
Now, it's interesting because this wasn't a unanimous decision. In fact, two of the Fed presidents were saying that they should have waited. What do you think might be giving them pause?
They're concerned that the rate increases might go too far, that it might in some way slow the economy. I think that what Janet Yellen would say is that she is moving from a highly stimulative monetary stance to a slightly less stimulative monetary stance, certainly not a tightening. The Fed rate is still below what the Fed funds rate is still below what the Federal Reserve wants inflation to be, so it's still a negative rate.
And to that point about inflation, it does still seem to be something of a mystery that it's still so stubbornly low, that it's still not hitting that 2% target. How much weight does that carry with Fed decisions?
I think it does tend to make them want to be cautious in raising rates. By the same token, there are some things out there that you can point to that are relatively predictable. There's lots of technological improvement. Markets are very competitive in many important product markets. We have perhaps excess capacity around the world. The other point, though, which makes the Fed want to raise rates is that central bankers are very nervous when they have interest rates so low and they don't have the opportunity to reduce them if they need to provide some monetary stimulus. So they're trying to buy themselves some room to maneuver in the future.
And speaking of the future, we know that we're going to have a new Fed chief, presumably Jerome Powell next year. How does that impact the prospects of rate hikes through 2018?
I think part of the reason why President Trump selected Jay Powell is that he believes that he and Janet Yellen are fairly closely aligned in terms of their views of the macroeconomic side of the Federal Reserve's mandate. For that reason, I don't believe that markets are going to see any significant change out into the future. And that, I think, suggests that there won't be any tremendous news about the policy outlook going forward.
Now, he'll also be inheriting this issue of the stubbornly low inflation that we mentioned before. What are some of the economic things that can be really affected when you have ongoing stubbornly low inflation?
It tends to subdue economic activity. When inflation is a little bit higher, people have a reason to spend their money today because it's going to be somewhat less valuable tomorrow. There isn't that much of a push to economic activity right now. I don't know how important that is. I suspect that what is more important right now is that people are still shell-shocked from the financial crisis and the major hit that that put on people's well-being. And for that reason, businesses and consumers are tending to be a little bit more cautious. We're going to need some good economic news to get them off the sidelines.
So as we look ahead, with Jerome Powell coming in and Fed Chair Yellen saying goodbye, if you looked back at her legacy, what would you say are the really outstanding moments? What does she leave behind?
You can discount what I'm saying because Janet is a former colleague and also a friend. But anybody who sits in that chair at a time when the world economy is so terribly dislocated, as she did, as vice chair of the Federal Reserve starting in 2010, and then as chair starting in 2014. The fact that we continued on a path of economic growth did not either overshoot it or fall back into another economic slowdown. You have to give her very high marks.
Certainly a very delicate balancing act. Thank you so much for your insights as always. Joe Minarik, Senior Vice President and Director of Research at the Committee for Economic Development.